And hey guys, so in today's video, I wanted to talk to you and break down this absolutely beautiful 1 to 5 risk to reward trade that we took on pound versus the dollar just a few days ago on Monday. As you can see, I sent this into the VIP group as a buy limit once we had this market structure shift from this demand zone. And as you can see, nice and swiftly, we flew straight to TP for an insane 5% gain on the account. Now, this was taken by mixing two different strategies together. So we had the Judas swing and also supply and demand areas. So this was a trade taken after a tap into a demand zone. So we'll break it down, but just whilst I'm here, if you are looking to join and become part of the Discord, then go down in the description and click the link to become part of the community today so that you can start to take these beautiful setups with us. But without further ado, let's jump straight into the analysis of this breakdown. So first things first, when we come onto our charts, we have to understand where we are in terms of market structure. Now, market structure is going to prove to be the most relevant thing when it comes to trading because all other strategies are subjective. Every strategy is subjective. However, market structure is not. Market structure is relevant everywhere and it is the only true thing in the market because you can't get away from it. Market structure is market structure and it's how we view the markets as a whole and where price is intending to go wherever it's trying to go. So first things first, when we come onto our charts, we start off on the daily time frame so that we can understand where we are on the higher time frame. So if you take a look at GU over the past few months, then what we can start to see is that initially price was bearish, right? We were creating a series of lower lows, lower highs, lower lows. So we were in a bearish trend, creating lower lows and lower highs until we came up and we broke above this previous lower high. When we broke above this previous lower high, we then in fact went in to put in a higher high. Now, what this means is that the market has shifted structure from bearish to now bullish. So when it comes to bullish market structure, we're going to be trying to identify higher lows and higher highs. That means we're going to be breaking the previous higher high, putting in new higher highs, and our higher lows are going to be above the previous higher lows. So once we understand that on the higher time frames, we are in a bullish time frame, then we can start to identify that looking for buying opportunities is going to prove more favorable than it is looking for shorting opportunities because we are in a bullish trend. And as they always say, the trend is your friend. So if I identify right here that this is the point where we actually broke structure to the upside, and this right here ended up becoming our brand new higher high. So what is the anticipation after we get a higher high? Well, the anticipation is that we are now going to see a higher low and then a continuation higher to break this previous higher high to put in a brand new higher high. So with that understanding, we can now safely start to assume that looking for buys is going to be more opportunistic than it is looking for shorts. So once we've got this understanding, we can then drop down to the lower time frame so that we can start to identify what the lower time frames are doing. So if we come onto the 4-hourly, what we can see is that price has started to put in this series of higher highs and higher lows. So when we see this bullish structure, we can now identify where the closest higher high is and start to identify where price can potentially go to put in the higher low before giving us that higher high. So with this understanding in mind, we can then identify areas in the market where price can potentially be magnetized to. Well, if we take a look at this entire sequence right here, what we can see is that right here, we put in this higher low, which got mitigated right here. So then price went up, put in a higher high, came back down and mitigated this order block. From there, price then went and broke this previous higher high and put in a brand new higher high. And then it came back down to mitigate this previous high low. Then from there, price then came down, mitigated, and then it pushed out again. And then it left this order block. Now, after this, price came back and it actually went through this order block. So what we can start to see is that price is creating this series of order flow, but it's also at the same time creating liquidity. So what it's doing right here is it's inducing all of this liquidity and is building it into the markets as a form of trend line, right? Retail traders would come into the markets and they would start to see this as a trend line. And now what they're going to assume is that now that this trend line has been broken, they're going to be looking for shorting opportunities from here. However, we as smart money traders understand that this is just liquidity being induced into the market. and that price is inevitably going to come and take it out before then continuing in its higher time frame direction. Now, the reason that we know this is because on the higher time frames, we've understood that we've now flipped characteristics to being bullish. So once we've got this higher time frame understanding, we know that we shouldn't get lost in the lower time frame noise, because as we understand now, this is just liquidity for the higher time frames to take out before going in the actual direction of the higher time frame level. So with this understanding, what we can now start to identify is that all of this order flow, which has been mitigating all of these order blocks, is just inducing liquidity. So because all of this is inducing liquidity, where can price potentially go to? Well, right below all of that liquidity right here, we've got this beautiful order block right below this liquidity. Now, with this order block being right below the liquidity, that gives me even more hope that price is actually going to come and sweep this liquidity, tap into this order block, and then give us that move away. So this is the actual framework that we were looking at when we were marking up this trade. And this is the exact reason why we took this trade in the first place. So we've done the hard work. We've understood where we are on the higher time frames. We've identified our higher time frame area of interest. Now it's just a case of waiting for price to come and tap into this zone and then give us the notion that is looking to move away. Now, this was back on Friday, and I don't really like to trade on Friday because Fridays, the market's about to close. I don't really like holding trades over the weekend. So on Friday, we didn't really bother doing anything with this trade. But I knew waking up on Monday that price is probably going to give us an entry. So with this understanding in mind, I was just happy that my analysis of this right here getting swept was correct, because we actually swept and we tapped into this zone. So once this happened, I've woken up on Monday, we've come onto the charts nice and fresh, and I knew that I was going to be looking for buying opportunities out of this order block. So this demand zone was very, very interesting. Now, once we understand that, we can now start to introduce our second trading strategy, which is the Judas swing. Now, for the Judas swing, all we're simply doing is identifying the Asia session range. And for me, the Asia session range is the times between midnight and 7 a.m. UK time. So if I actually mark out midnight on the charts, which is right here, and then I also identify 7 a.m. in the morning, which is right here, we can see that anything that happens in between this range is now my Asian session. So once we understand this, we can identify the Asia session high, and then we can also identify the Asia session low, which in this case is right here. So once we identify this, this is giving me more confidence that this area is actually going to hold, and we're going to be taking buyers out of here because the Asia session has now also built just above it. So not only have we engineered all of this liquidity just above this order block or this demand zone, we've now also created the Asia session range just above this zone as well. So now all we're simply going to do is sit on our hands and wait for price to sweep the Asia low, tap us into this order block, and then give us our entry. So if I now play price on, we're going to be keeping an eye on exactly how structure reacts, so that once we get that market structure shift, we can then safely enter into a trade because we know that the market has shifted from bearish to bullish. So if I now play price on, what we can now also see is that price again engineered liquidity right here, the same way that it done up here before sweeping it. And then again, we had this engineered liquidity, which then price comes down and sweeps one more time. So if we now identify what our structure looks like, we can see that price has just put in this lower low, then we get this lower high, and we've just put in a brand new lower low. Therefore, once we understand that this is bearish structure, we really need price to come up and break this previous lower high, put in a brand new higher high, so that we can then take our entry at the higher low, and then we can take it higher. So this was the understanding that we had coming into this market. So again, if I play price on, what we can see is that price comes up, but it doesn't actually go and break above this previous lower high. So until we actually get a break and close above with a full body closure, we're not going to be entering into any trades. And as we can see, price does get very close multiple times, but it keeps rejecting. It doesn't actually break above. And what this shows us is that the bulls are not in control yet. the bears are still in control, and this is just merely a lower high for price to come in and put in a brand new lower low. And as we can see right here, price then comes and puts in this lower low. So if we actually understand how market structure works, then this would have saved us from taking this trade prematurely, saving us this stop loss that got taken out right there. So again, if we identify a structure, we can see this as our lower low, and we have our lower high, lower low, lower high, and then we've just put in a brand new lower low. Therefore, again, in order for us to go and break market structure, we have to break above the key point in the market. And once we break above this, we can then safely take an entry somewhere down here at the higher low to then take price higher. So now that we have this understanding, we can clearly see where we are in terms of market structure. We know that price needs to break above this previous lower high to then give us a higher high so that we can take price higher. So we understood this. Price has come and tapped into the order block, swept the Asia low, as well as swept this trendline liquidity inducing into the order block. Everything is done. The hard work has been done. We've now framed up the trade, and all we're simply waiting for is that market structure shift. And as we can see right here, price then goes and closes above this area with force. So now we have the understanding that price has flipped from bearish to bullish. And once we understand this, we now know that we have gone into a bullish trend. This is where we can now start to identify what we're going to be taking our entry from. And as we can see right here, I sent this buy limit into the Discord, and we were looking to take an entry right here on this fair value gap. So if we go back to the charts, what we can see is that right here we have this beautiful fair value gap in the charts that caused price to give us that market structure shift. And this fair value gap is just simply displacement, where there were too many bullish orders in the market and no bearish orders, causing price to have this discrepancy where there were only bullish orders and no bearish orders. So because there was so much volume coming into the market, price then has this inefficiency, which it will then be magnetized to, where we can then take our entry from. So this is exactly where we entered the markets. We put our entry right at the open of that fair value gap. Stops go just below the low, and then we were targeting the Asia high as a first target, and then from there we were also targeting a little higher. So as we can see right there, it was a 125. So this is exactly how we had the trade framed up. And this is when I sent the signal into the Discord for everyone to jump in the trade with me. And if I now play price on, what we can see is that price does go a little bit higher, but then it comes straight down, magnetized to that fair value gap, tags us in, and then from there, it just starts to run. And this is the power of understanding where you are in terms of your market structure, because we understood that on the higher time frame, we were bullish, and price had just tapped into this higher time frame area of interest. We also understood that right here we had this trendline liquidity that was being induced into the market, so we knew that price was going to be magnetized towards this trend line so that it could take out everyone who was looking to buy at the support. So then price came down, swept everyone out of the markets, and then from there we also saw that price then engineered more liquidity by building the Asia session range just above this order block. It then swept, came down, tapped into that order block, gave us more inducement, more liquidity, which it then swept, finally gave us that market structure shift, beautiful entry at the fair value gap, and then a straight run to take profit. Absolutely beautiful 1 to 5 risk to reward, as we can see, hit nice and beautifully for myself and everyone in the Discord. So I hope this gave you guys some clarity into exactly how to identify higher time frame areas of interest, such as supply demand zones, order blocks, and also an understanding into exactly how to identify fair value gaps when looking for entries, and how to really put together multiple different confluences into one different trade, so that way it gives you more confluence and more confidence when actually executing these trades. But on that note, guys, I hope you enjoyed this breakdown. And again, if you did want to become part of the community, then go down in the description and click that link to become part of the group today. And whilst you're down there, don't forget to leave a like, comment, and subscribe. And I'll catch you guys in the next video.